Grade 12 learners, and welcome to today's lesson. In this lesson, guys, we'll be completing June examination paper 1. So it means now on your side, definitely need to ensure that you'll watch this recording up until the end, as we are going to complete June exam paper 1. So let's have a look at that table that we're given there. Question 1, guys, we need to complete firstly the statement of comprehensive income, also known as the income statement, the statement of financial position, also known as the balance sheet. Question 2, we need to complete the cash flow statement and financial indicators. Question 3 is the analysis and interpretation of financial indicators. Question 4 will be corporate governance. So let's get started. So likewise, guys, before we can start, please make sure that you like, you share, you repost my videos, you follow me on TikTok. If you're on YouTube, please make sure that you subscribe, guys. That will help me as well to create more content, to create more educational videos. Okay, so let's start. Question 1 is the statement of comprehensive income and the statement of financial position. So 1.1, here the theory part, but let's skip that part, guys. Let's go to 1.2. 1.2, we are dealing with Winston Limited. The name of the business we're given. So the information relates to the financial year ended 28 February 2025. So if the year end is on the 28th of February 2025, it means now our accounting period started on the 1st of March 2024. So guys, we're going to start with 1.2.2. 1.2.2, where we're completing the statement of financial position, also known as the balance sheet. So we need to note that some amounts are provided in the answer book. So always, guys, mostly for grade 12, some amounts will always be given. They will always be provided on the answer book. So here's the answer book that we're going to utilize. You can check. So can you see that we have gray shaded areas? So those gray shaded areas were not completing those sections. So please notice on equity and liabilities, the shareholders' equity given. So some amounts are already populated. So let's get started. So the balance sheet, guys, obviously it starts with assets. Assets will be non-current assets. So non-current assets, guys, we are not completing that section. We are completing the current assets section. So current assets from this example, guys, I did check the example. We need to firstly calculate inventory. Okay, inventory, guys, you need to check the information that were given as well. Information A, we have balances and totals on the 28th of February, balances for our current financial year 2025, balances for our previous period 2024. So we're starting with inventory. Let's focus on inventory. We have trading inventory of 920 from our list of balances. Let's check the adjustment. On the adjustment, guys, I did check this question paper. Obviously, I'm trying to save time as well. Here where I'm writing NP, the physical stock count on the 28th of February revealed the following. The physical stock count is revealing that we have trading stock of how much? 890,400. So which trading stock do we mostly trust? We trust the trading stock from the physical stock count. So we want the trading stock from the physical stock of how much? 890,400, not from the list of balances. So you go and record that amount, 890,400. So I already know as well, guys, that there will be information that we need to check as well. Please note stationery used for the year. We have stationery used. I know that mostly for grade 10 and 11, you were mostly given stationery on hand, but here we have stationery used of how much? 57,500. So we need to calculate stationery on hand. If we're given on hand here, we're just going to take the training stock, the physical stock of 890,000 plus stationery on hand. But now we need to calculate on hand. How do we calculate on hand? Let's take the stationery used of 57,500. Check the value of our stationery from the list of balances, 63,250. So the difference between those two values will be the stationery on hand. Are we clear? So I'm going to add the difference between 63,250 minus 57,000. Then you'll get the stationery on hand. So you can press your calculator. On my side, I'm getting a figure of 896,150. Okay, so let's go and check our trade and other receivables. Trade and other receivables, guys, please familiarize yourself again with the structure of trade and other receivables note. So according to the structure, guys, we are starting with net trade debtors. After that, what do we do? How do we calculate net trade debtors? You are taking your trade debtors, your debtors control, minus provision for bad debts, and then you get net trade debtors. After you add income receivable, if we have any income that we're supposed to receive for the current financial year but not yet received, you add prepaid expense, an expense that was paid in advance for the next financial year. You add deposit, if we have any deposit that we are claiming from the municipality, deposit for water and electricity. Insurance claim, if we have any insurance that we have claimed and it was approved by the insurance company, you also add. Okay, so for grade 12, mostly, guys, you're not going to be required to prepare the trade and other receivables note and trade and other payables note. They assume that you are familiar with the structure of these two notes. So this is what we need to do. I want you to notice that we're already given the 382,700. This 382,700 is from the list of balances, debtors control of 382,700. So we need to check if we have any income receivable. But according to the structure, guys, we start with net trade debtors, where we take debtors control minus provision for bad debts. Okay, do we have any provision for bad debts or anything that will reduce our debtors control? So I want you to check where I'm writing NB, that information. So guys, I advise you to always pause the video, read the adjustment, and then we analyze the adjustment together. So we're given a customer who owes 3,700 requested that the balance be transferred to his creditor's account, as he also supplies the business his office with office stationery. So with a customer here who is owing us 3,700 is now requesting that 3,700 be transferred to his creditor's control. So which means debtors control is decreasing, because now a customer is requesting that 3,700 to be transferred where? To his creditor's account, because he's also supplying the business with office stationery. So we're going to minus here. We're minusing how much? We are minusing the 3,700, because the customer is requesting that his account must be transferred to the creditor's control. But I also want you to have a look at the second adjustment, guys. We have income receivable. We have income receivable. So we have the tenant occupied part of premises since 1st April 2024. Please pause the video again, guys, and read that adjustment carefully. This is rent income. So rent income, that information is very important. So the tenant occupied part of the premises since 1st April 2024. He has not paid the rent for January and February 2025. So we haven't received rent for January and February 2025. Here is income receivable and accrued income. For how many months? For 2 months. Rent was reduced by 10% on 1st September 2024. Reduced by 10% 1st September 2024. This is what I also want you to take away. Please take this information, rent income from our list of balances, 107,500. So let's try to use this Word file. So we know that our year starts on the 1st of 01 March 03 when 2024. Our year end is on the 28th 02 2025. What do we know? We know that our tenant started occupying our building from the 1st of April 04. April is 04 2024. We know that rent was reduced by 10% when 01 September is 09 2024 September. We did not receive rent for January and February. So what do we want, guys? We know from our list of balances we have rent of 107,500. So we are trying to calculate the rent that we're supposed to receive for January and February, but not yet received. So from 1st of April up until the 1st of September, how many months do we have? It will be April, May, June, July, August. It will be 5 months. For 5 months, we're receiving rent. How much was that rent? It was X amount. So it will be 5 times X plus from 1st of April up until, from 1st of September up until the 1st of January. Why 1st of January? Because we did not receive rent for Jan and February. How much did we actually receive? From 1st September 2024 up until the 1st of Jan 2025. You don't know. But it was how many months? September, October, November, December. 4. For X, we're receiving X amount of rent, but we know that X was reduced minus by what? 10% of X was reduced by 10% of X times X times 4% is 0, not 4%, guys. Rent was decreased by 10% times by 0, 1, 10% equals to the 107,500. Now we just need to solve for X. We have 5X. 4 times X, you will have 4X. 4 will times X and will also multiply 0, 1. It will be minus 0, 4x equals to 107,500. Now let's solve for x. 5 plus 4 plus 0 minus 0, 4. 0.6. So what we do now, we divide by 8.6 both sides. Divide by 8.6, 8.6 will cancel 8.6. It means now we were receiving 12,500 per month before that 10% decrease. So we're receiving 100%. The 100% was decreased by 10%, which means we ended up receiving how much? 90%. So the 12,500 times 90, it is how much? 11,250. 11,250. This is 5, guys. 250. So per month, guys, after the 10% decrease, that is the amount of rent that we're receiving. So we want accrued income of how much? Of how many months? 2. We'll multiply by 2 there and get 22,500. That is an accrued income. So go and record the accrued income plus an accrued income of 22,500. Okay, so what else will affect our trade and other receivables note? Remember, guys, from the note there, we start with the net trade debtors, where we'll calculate, we take trade debtors, the debtors control. That 382,000 is for trade debtors, the debtors control. We're supposed to minus provision for bad debts. Let's check provision for bad debts. Provision for bad debts, guys, we're going to take the 382,700 and reduce our trade debtors by that amount that was transferred. A customer who owes 7,300 requested that the balance be transferred. So we need to reduce the debtors control by 3,700. But I want you to also notice the following adjustment after that one, where I'm writing NP again. Provision for bad debts must be adjusted to 4% of the outstanding debtors. So we need to calculate our provision for bad debts. So we minus first the 3,700 that we're transferring to creditors control account, and then we're going to get 379,000. What do? We multiply by 4%, and then we're going to get 15,160, the provision for bad debts. So we are done calculating the provision for bad debts. What do? We minus it. Let's go and minus the provision for bad debts. Minus 15,160. What else do we record from that note, guys? Provision for bad debts, we did record income receivable. We just calculated the income receivable from rent information. Expenses prepaid. Do we have any expenses prepaid? Let's check if we have any expenses prepaid. So I want you guys to check where I'm writing NP again. The company has 2 directors who earn the same monthly fees. You can pause the video and read the information carefully. The company has 2 directors who earn the same monthly fees. A third director who was appointed on 1st November 2024 earns 4,200 more per month than the other two directors. He was paid until 31 March. So we have a prepaid expense here because the director was paid, a new director that was appointed from 1st November 2024, who is earning 4,200 more, was paid until 31 March 2024. Are we clear? So we have a prepaid expense here for 1 month. So we need to determine that prepaid expense. But let's check the director's fees from our list of balances. We have director's fees of 930,150. So let's try to borrow more space here, guys. So what we have two directors. Two directors, they were there for how many months? 12. 2 times 12. How much were they receiving directors' fees? We don't know. Times X. We have a new director that was appointed when? 1st November, who was paid up until the 31 of March. So if you count from November, December, Jan, Feb, March, it will be 5 months. So that director was receiving X amount of director's fees. But we know he was getting 4,200 more. So that X was increased by 4,200. And then the total amount from our list of balances, it is 930,150. Now we need to solve for X. 2 times 12 is 24. X 5 times X, you will have 5X. 5 times the 4,200, you will have 21,000. So 24X plus 5X, it will be 29X is equals to 930, 150. Take the 21 from left to the right. The sign will change into a negative. After that, you have 29X equals to minus, and then you will have 909,150. You divide by 29 both sides. 29 will cancel 29. X is equals to 31,350. Directors were getting 31,350 per month. So the new director per month was getting 31,350 plus 4,200. Then he was getting 35,550 per month. 35,550. So it means now the prepaid expense of that 1 month extra that we paid in advance, it is how much? 35,550. So we go and add prepaid expense of 35,550. After that, you press your calculator and then you should get 421,890. So remember, guys, non-current assets were not completing. So it means now we need to move and check cash and cash equivalents. We're not completing them. Gray shaded. So total assets, we're not calculating total assets. We move to equity and liabilities. For companies, we start with shareholders' equity. Shareholders' equity, it is made up of ordinary share capital and retained income. And as you can see, we are already given shareholders' equity of how much? 2 million and 69,000. So we are not calculating there. So what about non-current liabilities, guys? Non-current liabilities. For this example, we are going to calculate non-current liabilities differently. We know that from our list of balances, look at our list of balances. We have loan from who? King Bank. We have a question mark. We don't know the amount that we owe King Bank. But what do we know? We are given the second last adjustment where we have ratios. Can you notice the debt equity ratio is given 0.5 is to 1. How do we calculate debt equity ratio? Debt equity ratio, it is non-current liabilities is to shareholders equity. Non-current liabilities is to shareholders equity. It means now that 0.5 represents what? Our non-current liabilities. So we already have shareholders equity. Shareholders equity of 2,069,000. Guys, for grade 12 and even grade 11, you need to know how to use your ratios on the balance sheet. So 2,069,000, which is 1. This is 1 for every 0.5 of liabilities. Then you times by 0.5. Then you will get non-current liabilities of 1,034,500. After that, you know this non-current liability, we only have a loan. A loan from who? King Bank, which is 1,034,500. Are we clear? So we are done with non-current liabilities. We need to go and calculate our current liabilities. Current liabilities, as you can see, we need to start with trade and other payables. Trade and other payables. So let me remind you again with items that you need to record on trade and other payables. Trade and other payables, we start with trade creditors, creditors control. We add expenses payable, an expense that we're supposed to pay. We add income received in advance. We add creditors for salaries if we owe our employees salaries that we are promising to pay on the next financial year. We add SARS payee, amount that is owed to SARS. We add pension fund from salaries owed to employees, medical aid and UIF from the salaries owed to employees. Then we add as well the current portion of the loan deposit from tenant. If tenants have paid a deposit before renting our premises, if they have paid a deposit, that amount you classify it as current liability, because you will have to refund the client, you will have to refund the tenant. So you add it where on trade and other payables. Once you agree with the tenant to say, hey, I can see that you are planning to move out in the next financial year, and then now you want your deposit, I am going to pay your deposit in the next financial year. So you record this amount as deposit from tenant. All right, so let us proceed. We start with trade creditors, guys. Trade creditors. We're given the 198,400, that should be trade creditors. $198,000 creditors control, 400 were given. So we need to check expenses that are payable, but on my side I already know that we have expenses payable. The first additional information under C, only half of the audit fees were paid. Only half of the audit fees were paid. What about the other half? The balance will be paid in March 2025, which means we are promising our auditors that we'll pay them the other half when the next financial year, March 2025. What you see, the 45,000 for audit fees, this is only half of audit fees. The remaining balance will be paid in the next financial year. So what you need to do here, guys, this is an expense that must be payable. We owe the other half. The other half is also 45,000. You add 45,000. Okay? So I want you as well to check the following adjustment. Adjustment Roman figure number 3. The stock purchase of 13,000 was made on account. We've paid, so we've bought stock, trading stock on credit. If they are saying on account, just know that we are buying on credit. The stock purchase of 13,000 was made on account from Smith and Sons suppliers and recorded correctly. So we bought this from our suppliers on credit. What happened? 20% of the stock received was defective. The supplier acknowledged the error and issued a credit note, but no entry has been made. So the supplier has recognized that they've made a mistake now, which means from the 13,000 trading stock that we bought, we returned 20% to the supplier. It means now we are no longer owing 20% of the 13,000. Are we clear, guys? So what is 20% of the 13,000? So it is 2,600. We are no longer owing 2,600 because we have returned 20% of the trading stock that we bought on credit. Then we minus 2,600, and then we also have that account that was transferred, guys. Do you remember that 3,700? Roman figure number 5, a customer who owes 3,700. A customer who owes 3,700 requested that the balance be transferred to his creditor's account, as he also supplies the business with office stationery, which means now his creditor's account must also be reduced by how much? 3,700. So you go and add, sorry, minus 3,700. Okay, so we need to check if we have anything from that list of items, guys, on trading other payables. Please look at that note carefully. So we have creditors for salaries of how much? 24,750. We owe our employees 24,700. That must be paid in the next financial year. Must be paid in the next financial year. So that amount will definitely increase our trade and other payables. So you can now press your calculator and have the total amount. So on my side, I have 261,000 850. So for grade 12, all the examples that I've checked, they always have shareholders for dividends. Shareholders for dividends, your final dividends, what you are promising your shareholders to pay in the next financial year during your current financial year. You declared for the current year. So here, guys, if you can check shareholders for dividends from the list of balances who are not given, can you see we have a question mark for the current financial year? This is what we record, guys, where I'm highlighting on the balance sheet. That is what we record, shareholders for dividends for the current financial year. Your final dividends you declared for the current financial year. So I want you to look at that information where I'm writing NP, where I'm highlighting. The company repurchased 30,000 shares at a price of R3.10 on 26 February 2025. The repurchased amount in the retained income note, it is how much? 33,000. These shares qualify for final dividends, the shares that we have repurchased. So what we need to do, we need to notice that 33,000 from the retained income note. Remember, on the retained income note, we record our share buyback at the price that is above the average issue price. So how do we calculate the price that is above the average issue price? You are going to take the 33,000 divided by 30, then you're going to get R1.10. Okay, so that R1.10 is the price that is above the average issue price. So can you notice that the company repurchased shares at R3.10? So if you can take that R3.10 minus R1.10, you are going to get R2. This R2, guys, is the average issue price. Is the average issue price. So we want to know the actual number of shares that we have at the end of the year. But I want you to read the last part of that adjustment. These shares qualify for final dividends. These shares qualify for final dividends of 30 cents. We have the average issue price of R2. So let's go to our ordinary share capital from the list of balances. From the list of balances, we have ordinary share capital of 1,189,000. So we need to divide this 1 million by R2. So this 1 million is given at the end of the year, guys. It also includes the share buyback. You divide by 2, then you'll get the number of shares, 594,500. This is actually the number of shares. This is the actual number of shares. Sorry, guys. That 1,189,000, it does not include the 30,000 shares that were repurchased. So on your side, this is what you need to do to calculate your shareholders for dividends. Can we just write here? You take 594,500 plus those shares that were bought back, which they qualify for what? For the final dividends that was declared of 30 cents. 30 cents is equivalent to 30%. So you multiply by 0.30. So these calculations, guys, where I am drawing a line, those calculations, because we do not have sufficient space, enough space on the balance sheet, they must be shown in brackets. Please always show those calculations in brackets. So please multiply. After multiplying, guys, you should get shareholders for dividends of 187,350. So what else do we record? I did check that we owe SARS. Pay as you earn, we owe SARS. So check from SARS, income tax. Income tax, so we have a credit at the end of the year, credit 33,200. We owe SARS that amount at the end of the year. We owe SARS an amount of 33,200. We have a loan, and the loan will always have the current portion. So we are showing it different, we are showing it separate, guys. The current portion of the loan. So the current portion of the loan, I show it separate. I want us to go and check the last adjustment. The last adjustment, the loan from King Bank will be reduced by a capital portion of 21,000 per month. Per month, we'll be paying 21,000 per month. So which means each year for the next financial year, guys, we'll be owing 21,500, which is due when? 21,500 times 12, it is due when? On the next financial year. If per month we are paying 21,500, which means the next financial year will be owing, or we have an amount that is due of how much? 21,500 times 12 is payable. It is payable when? The next financial year. The next financial year. So that will be classified as current portion of the loan. So you take 21,500 times 12, then you will get the amount that is payable the next financial year. It will be 258,000. 258,000. And then from our information, guys, from the balances, if you are paying attention, we also have a bank overdraft. Bank overdraft, what am I writing now? Hey, never mind the spelling there. Bank overdraft. Bank overdraft. So let's check from our list of balances. We have a bank overdraft of, where I am ticking bank, it is unfavorable as on 24 February. It is unfavorable, which means we owe bank money. We owe the bank 100,900. That is a bank overdraft. So I already know that we have information that will impact our bank overdraft. So look at information B, the extract from the cash flow statement. The cash flow statement shows that we have received a fixed deposit. We have received money from a fixed deposit of how much? 55,100. An inflow. The fixed deposit matured 28 February 2025. It matured after that balance, that bank balance shown as unfavorable bank balance. Remember, the bank balance, it is unfavorable when? 24 February. But on the 28th, fixed deposit matured, we are receiving money, we have an inflow of cash that should reduce, it will reduce our bank overdraft, the money that we owe the bank, by how much? 55,100. Okay, so what else do we need to do, guys? I think we bought shares, the repurchase of shares. The repurchase of shares, which means the amount that we owe to the bank must be increased because we are buying, we are spending more money to repurchase shares. Okay, so the company repurchased 30,000 shares at a price of 3 rands 10 cents. That is the amount that we spent, 3 rand 10 cents per share. How many shares? 30,000 shares. So this is what you need to do, plus that 30,000 times 3 rands 10 cents. Then you can press your calculator. You are taking the 100,900 minus 55,100 plus, open bracket, 30,000 times 3 rand 10 cents. Then you're going to get an amount of 138,800. Okay, so as you can see, guys, we are not calculating total equity and liabilities. It means now we are done with our example. So thank you guys for watching, and please note that we are going to create a separate recording where now we're going to do which question? We're doing the statement of financial position from question 1. So I'm going to create another recording where from the same question paper we're going to prepare the statement of comprehensive income, part 2. Then part 3, we need to do the cash flow statement and financial indicators. And then we also need to do the analysis and interpretation of financial indicators. And then please check as well, guys, I will upload a recording where we need to complete the corporate governance question as well. So likewise, guys, thank you so much. Please make sure that you are liking my videos so that the algorithm as well can help me to create more educational videos. You are subscribing, you are reposting my videos. All right, thank you. Cheers.